Welcome back to Iraqi Dinar Alert. Today, we're diving deep into the single most important factor shaping the future of the Iraqi dinar, oil prices. The dinar is one of the most talked about currencies in the world, with endless speculation about its potential. But to have a realistic conversation, we need to understand how Iraq's economy is fundamentally tied to the global energy market. So, let's break down exactly how oil prices drive the value of the Iraqi dinar. First, let's state the obvious. Iraq's economy is built on oil. 2. Over 90% of the government's revenue comes directly from oil exports. It's a simple formula. When oil prices go up, Iraq earns more US dollars. When oil prices drop, so does the government's income. This is crucial because international oil is traded in US dollars. High oil prices mean a flood of dollars into Iraq's foreign currency reserves. These reserves are the lifeblood of the economy, allowing the Central Bank of Iraq, or CBI, to do everything from defending the dinar's value and financing imports, to paying government salaries and funding critical reconstruction projects. Simply put, more oil money means greater financial stability, which is the foundation for a stronger dinar. This brings us to our second point, the direct link between oil prices and Iraq's foreign reserves. Think of these reserves as the backbone of the dinar's value. The more reserves a country holds, the more confidence investors and the global community have in its currency. When oil prices are high, Iraq's foreign reserves swell. This empowers the CBI to maintain or even strengthen the dinar's official exchange rate. It also helps shrink the gap between the official rate and the black market rate, boosting investor confidence. Conversely, when oil prices are low, those reserves start to drain. To protect what's left, the CBI might be forced to weaken the dinar. This widens the gap with the parallel market and can trigger inflation, which hurts everyday Iraqi citizens. We've seen this happen before. During past oil price crashes, Iraq had to devalue the dinar just to keep its finances stable. Third, oil prices directly influence Iraq's national budget planning. Every year, the Iraqi government creates its budget based on a projected oil price. This is often called the budget break-even price. If the actual global oil price falls below that projection, the government is immediately in trouble. This leads to budget deficits, increased borrowing, and cuts in public spending. It also causes delays in major development projects that are essential for the country's future. When oil revenue suddenly drops, the government often puts pressure on the central bank to adjust its currency policy. In the most extreme scenarios, this can lead to a devaluation of the dinar, cuts in public programs, and a surge in inflation. The dinar's stability is directly tied to how accurately Iraq can predict future oil prices, a notoriously difficult task given the volatility of global markets. That volatility is our fourth key point. Oil prices are famous for being unpredictable. Global conflicts, OPEC decisions, production cuts, sanctions, recessions, and even natural disasters can cause massive sudden swings. For a country like Iraq that hasn't diversified its economy, this creates extreme vulnerability. A sudden plunge in oil prices can send a shockwave through the currency. This uncertainty fuels speculation in the parallel market, causing businesses to delay investments due to the high risk. In response, the CBI might be forced to tighten or restrict access to US dollars to control the situation. So even if the dinar appears stable at its official rate, the black market rate reacts almost instantly to oil price movements. This dual market pressure erodes confidence and can seriously slow down economic growth. So, what about the positive side? Could higher oil prices actually boost the dinar in the long run? Absolutely. While an overnight revaluation remains highly unlikely, a period of sustained high oil prices can gradually strengthen the dinar. How? First, by growing those all-important foreign reserves. More dollars allow the CBI to intervene against volatility, meet import demands, and narrow the gap with the parallel market. Second, it builds stronger investor confidence. When Iraq has a steady stream of oil revenue, global financial institutions and private investors see the country as a more stable and trustworthy place to do business. Third, with more revenue, Iraq can finally fund the deep structural reforms it needs. This means investing in infrastructure, improving the electricity grid, and developing local industries and the banking sector. These reforms are what create the true foundation for long-term dinar appreciation. And finally, if oil revenue is stable, the CBI doesn't need to inject as many dollars into the market through its auctions, allowing the dinar to stabilize more naturally. Now, for the flip side, low oil prices pose a major risk. If global oil prices fall sharply and stay low, the Iraqi dinar could face immense pressure. The first and most immediate danger is the loss of dollar reserves. Without enough reserves, the central bank simply cannot defend the official exchange rate. This leads to our second risk: massive budget deficits. The government would be forced to borrow more, cut salaries, or slash funding for essential projects, causing widespread economic pain. Third, inflation would likely spike. A weaker dinar makes all imported goods from food to medicine more expensive for ordinary citizens. And finally, this all creates intense pressure to devalue the currency. To protect its dwindling reserves, the CBI might have no choice but to reduce the official exchange rate, just as it did in previous years when low oil prices threatened to collapse the government's finances. This means the dinar's future will be shaped by the global oil market. Several key factors are at play. OPEC's production decisions are a big one. If OPEC cuts production, prices tend to rise, which is good for Iraq. If they boost production, prices could fall, which is a major risk. The risk of a global recession is another factor. Economic slowdowns in major economies reduce the demand for oil, pushing prices lower. Then there's the long-term shift towards renewable energy. As the world moves away from fossil fuels, the future demand for oil could decline permanently, posing an existential threat to Iraq's economic model. And finally, regional conflicts in the Middle East can cause sudden oil price spikes, but they can also disrupt production, creating even more instability. For a currency as dependent on oil as the dinar, these powerful global forces are impossible to ignore. So, the big question is, can the dinar ever strengthen independently of oil? In theory, yes, but only if Iraq successfully diversifies its economy. In reality, diversification is a slow, difficult, and expensive process. If Iraq can build strong non-oil sectors like agriculture, manufacturing, tourism, technology, and natural gas, then the dinar could finally have a more stable and independent foundation. But until that happens, and it's a long road ahead, oil will remain the primary engine driving the dinar's value. So what's our final verdict? It's clear, oil is the key driver of the dinar's future. The real question isn't will the dinar revalue overnight. The better questions are, how stable will oil prices be in the coming years, and how effectively will Iraq manage its oil wealth? Let's put it in the simplest terms. If oil prices rise and remain high, the dinar has a real chance to gradually strengthen as the economy stabilizes. If oil prices fall or collapse, the dinar will face serious pressure, a risk of devaluation, and continued market volatility. And if Iraq can finally diversify its economy away from oil, the dinar will gain the long-term, sustainable strength it needs to prosper. For now, all eyes remain on the global oil market. Thanks for watching. If you found this breakdown helpful, be sure to hit that like button, subscribe to Iraqi Dinar Alert, and ring the bell so you never miss an update. We'll see you in the next video.